The event dominating markets through February and into March is the Russian invasion of the Ukraine. We've seen intense media coverage of some of the tragic scenes from around the Ukraine, and in reaction, Western powers have announced sanctions on Russian banks, oligarchs and other wealthy individuals. The key economic action has been against the Russian central bank, effectively shutting Russia out of the global financial system, and this is unprecedented. So what does this all mean for global markets currently? Well, initially it's fueled some short-term volatility which has been seen right across the media. Starting with the economic impact, we've seen a rise in fuel prices once again due to the Russian invasion. The knock-on effect of this is it may cause further inflationary pressure on the global economy. Inflation and the cost of living crisis remains a key focus point for markets. In the UK, for example, analysts expect a 50% increase in utility bills come springtime. The Bank of England expects inflation to remain above their target of 2%. Now, it should be noted, however, that this is a balancing act, as the conflict in the Ukraine could actually slow down global growth further. So, as a result, we expect the trajectory of interest rates in Western markets to remain on an upwards trend. Turning to growth assets, consumer discretionary equities have been hit the hardest in recent weeks. We've seen announcements from the likes of BP, who are saying they're no longer wishing to hold Russian assets on their balance sheet going forward. On the flip side, this has been good news for utilities. These are mostly unaffected by the cost of living crisis across the globe. Looking at factor performance, small cap stocks performed the best recently, whilst understandably momentum stocks performed the worst. Turning to defensive assets, as investors have looked to de-risk over the period, bond prices have strengthened as a whole. As a result, UK 10-year gilts have fallen in sympathy with the price rise. In conclusion, whilst there is a lot of short-term uncertainty around the Ukrainian situation, this hasn't changed our view on managing investments. Our focus remains on balancing risk and using defensive assets in an attempt to smooth out the investment journey for our portfolios. Despite such events being distressing, we believe that it is unlikely to have any long-term impact on investors' returns.